What is up, guys? Welcome back to the fourth episode of this 0 to 20K challenge. And today, last episode we weren't able to do because Will was gone over the weekend, and we decided to, just kind of postpone it for a week. And he also didn't really take any trades the previous week. But this week, unfortunately, the week did not go that good. We ended up, he ended up losing the accounts, which again, some people I already can smell the comments, but before I go into the video, before we really go into the learning experience, there's a couple of things I want to preface about trading. Trading is not a linear game. Some people think that, you just go up and up and up and up and up. In reality, that's not how it is. And that's why, when you hear people talking about scaling and trading, you have to take your time. You really do have to take your time because it's a slow game. If you try to go too fast, when you have a setback like this, it can wipe you out. And that's why we're trying to go slow. We were on these accounts for, around a month and ended up losing them, which was due again to 3 trades or four losses in a row, right? And it's or was it 3 losses?
I think it was 3 losses.
Okay, so it's 3 losses. Yeah, the drawdown trailed. Yeah, so the drawdown trailed. So it's 3 losses in a row. That's only 3 trades. And he didn't blow it emotionally. He just took 3 trades that were not the best, right? But what that is, it's 3 learning experiences. It's 3 learning experiences, and that's a good thing. It's different than when you blew at accounts because you got emotional and you tilted, and now you basically gambled those money away. But now that you blew these accounts, taking, 3 trades, it's did you lose the $1,000 you spent on the accounts? Sure, but that's a little sting. That's a little sting, and that's your lesson. That's actually the lesson you're going to learn to take these 3 trades. So it's now when we go back and we review these 3 trades and we do a little lesson on kind of what you were missing out, because all 3 of the trades that you did lose, they were kind of for the same reason, and we'll talk about this. We'll go into the journal, we'll go into the charts. But the main lesson is, again, some people will get discouraged. Some people will not take it as a learning lesson. Maybe they'll, get in their head. Maybe they'll not even quit, but some people will quit and they'll get in their head when in reality it's this is a warning. It is a warning of what happens when you do ignore the market, when you don't really learn from the market. And it's the market is going to teach you the story, and thankfully it's just one set of accounts blown, which is always going to happen. You're not always going to, pass and get a payout right away. That's just not as linear as trading is. So it's in reality, and on top of that too, the payouts you got last time still do cover 2 more sets of accounts. And at the end of the video, we'll kind of talk about if we're even going to, stick to the 5 stack of accounts or if we're kind of going to adapt. We'll look at that. But, Will, I don't know if you want to talk about kind of how you feel and, where your mind's at, because I think that's a very, very important factor as well.
So the last time I blew a set of funded accounts without getting a payout was in May. And it has been a while because I have been getting a payout every month, whether that be on 1 account or 3 accounts. And the difference between this time and last time is that I had no idea why I lost the accounts. I was just frustrated and emotional, and I was oh, the market's out to get me. Why is this happening to me? I just don't get it. This time I have every single loss that I took journaled, and I understand exactly why I lost a trade. And even though the 3 trades that I did lose all have something in common, a little bit in common, I'm still learning every single day from these losses. They're teaching me more than my wins, honestly, because the wins are easy to take, If it presents itself, then it's super easy to take. It's just about avoiding losses. And I feel I have gotten a lot of data, and, I'm not even... Obviously, when I first blew the accounts, I was sad, I was damn, $1,000 down the drain, but I also got 3 really, really good learning experiences, and now I'm just looking forward to actually applying that to my next set of accounts.
And that's the best way it is. Whenever you lose a set of accounts, maybe you lost $1,000, okay, it already happened, you can't change it. What you can change is where you go from here, right? Some people will, get that little insanity thing, and it's okay, I blew these, I got unlucky, and that's what you did in the past, and then you'll trade the exact same way. You don't change anything. What is the result going to be? You're just going to blow them again, right? And that's how people get stuck in this loop over and over and over again. Instead, we take these, blown accounts as a loss. It's like getting a little sting. It's a little sting. You get stung by a bee. It hurts for a second, but you can learn from it. It's not a gunshot wound. You're not going to sit here and bleed out unless you put yourself in that mindset. If you do continue making the same mistakes over and over again, yeah, you are going to get that gunshot wound. You are going to bleed out. You're, not going to be here for the long term. That's the thing about trading. It's not a linear game. If you are here for the long term, there is going to be setbacks. And the setbacks are only going to get worse and worse and worse. Meaning that, instead of being $1,000, maybe now it's $5,000, $6,000, $10,000, right? But it's like, if that setback wipes you out and you don't learn from it, you're not going to progress. It's not a linear scale. You'll have that, down move and then up, down, like that's how it works. And in reality, it's just the mindset and how we learn from the experiences that dictate what our future is going to be like. So, that all being said, prefacing the start, now we're going to go into the actual trades and what we have learned, what you have learned from these trades and how we're going to adapt and kind of continue moving forward over the next couple of weeks, the next couple of months, and yeah. All right, guys, so what I'm going to be doing now is I'm going to go through Will's journal, and we're going to look at all the trades that he took, the 3 losses that he took, and I'm just going to do a little quick overview, kind of see what my inputs are, and then we'll kind of look at your inputs, and then we're going to hop on the chart, and we'll see what we have learned and kind of, go into the future. So the first trade we have right here is last Tuesday. Well, actually, we can start at Monday. So first day right here, we have Monday. This was, by the way, 2 weeks ago. Very, very, choppy week. I personally took the whole week off. I think it was very, very improbable. So first day, very big range, and what you ended up writing, higher time frame, didn't see any draws other than the gap. Open to seeing a deep retrace and strong displacement. It's a trade back to all-time high. We didn't get that, and price just looked like shit, so I stayed away. Yep. Pretty. Yeah, what is bro laughing at? What you laughing at, gang? Ain't shit to laugh about, bro. Oh my. But yeah, okay. No trade that day. That is reasonable. And then last Tuesday, you ended up taking a long, and again, we don't have the long exactly pulled up. What you did end up taking is we did get this, tap in this gap, and then we got like a 1 minute wick candle, a 1 minute candle that wicked and closed below highs. And it's like we literally rejected highs and he's still long. So it's like you did get caught up on the 1 minute, but I actually do want to see what your reflection is. Today I should have seen that wick we made on the 1 minute and recognized that I shouldn't long. We took all-time high before New York session, another very big thing. Since we're at all-time high, I wanted a deep retrace and a confirmation out of it, which correct idea, right? And it's like next time at all-time high, I'm going to stay on the 5 minute and keep in mind price tap. So it's like this is a pretty good reflection, right? It's like you did recognize you scaled down to the 1 minute time frame and you saw a large wick, but you still ended up trading. But it's like, I don't, like, the next losses we're going to look at is still 1 minute losses, where it's like the high time frame was a bit ignorant. I think it's a little bit different here because the reason why this trade specifically didn't play out because we did, like, reject highs. But again, there still was this trade, there's really no higher time frame draw. The other losses you took, there was a higher time frame draw, you just got caught up on the lower time frame. So it's like, looking at this, I think the reflection is relatively valid. And then looking at the rest of the week, right, no trade day last Wednesday, same thing, very range bound day. Seems like a good, call to not take the trade. Last Thursday, kind of ran down, ran back up. I think there was a pretty okay long if you did want to take one, maybe off of like this candle closure back to the highs. I think it was sufficient, but I do want to see kind of what you wrote on that specific day. I think last Thursday was like the only really day. Okay, originally wanted shorts, but I could not find a safe entry, so I didn't trade and give them to FOMO. Okay, so you wanted shorts. First of all, like I would go more in depth on this. It's like, what exactly did you want to see? Why did you want to see shorts? What specific target did you want to see hit? And why did you decide not to? So it's like, I didn't trade and I didn't give it to FOMO. That's okay. But I think you should go more in depth of like because like you want to document exactly what you're thinking at the time. I always like writing for my reflections. It's like, what am I thinking going into the day? And what do I actually do now that the day is over? So it's like, that's what I always like to base my journal entries off of. And then we'll look at, last Friday. Doesn't seem like you have the picture, but I know last Friday, not 2 Fridays ago, we did kind of just like range. So that's fine. And rest of the days, we'll look at Tuesday of this week. Now, what do we have? Okay, I remember this day. So price does what, right? Price off open. We push down, higher time frame. We flip right here. Okay, one thing I'm also noticing, so I don't know why I completely even forgot to mention this. This is actually the main thing that we're gonna look at. You are only taking pictures of your entry. You need to be taking pictures of the hourly, the 4 hour, and the 15 minute. So it's like that is honestly a big issue, and that is what we're gonna go into all of the trades that you actually did end up losing were due to the higher time frame that you kind of ignored some stuff. So with that being said, moving forward now, every single journal, you have to see at least 4 time frames. You have to see your entry time frame. So if you take your entry on the 1, if you take your entry on the 5, on the 15, your entry time frame not below your entry time frame. So if you take an entry on the 5 minute, don't send me the 1 minute, right? Or don't put in the 1 minute. Put in maybe hourly, 4 hour. I think that's sufficient. Or maybe 15 minute, hourly, 4 hour, right? So that's actually a very, very big thing. But this day right here, there was that entry, and let's see what you kind of wrote. Tuesday, we dumped a bunch, and logically, I thought we would fill a 4-hour gap before going lower. Missed my entry because by the time I saw that 1 minute candle close, it would have been a negative RR, correct? Don't hesitate on these type of days. Okay, but you said you don't hesitate, and then you said it's okay. So it's like, which one is it? Don't hesitate, or is it's okay? You see how you're kind of contradicting yourself here? So it's like, what do you like looking back on this specific day? It's like, okay, I remember like, right, we get this close right here, and then we get this long entry, and you're right? By the time this candle close up here, it's definitely a sketchier long entry. But with that being said, it's like, okay, you put don't hesitate, and then you also put it's okay not to trade these days. So like looking back on this day, what would you now tell yourself? Would you tell yourself not to trade this day? Would you tell yourself to not hesitate? Would you tell yourself to maybe take a completely different setup? So, maybe not even a 1 minute. Like, what would you tell yourself on a day like this?
I think the reason why I wrote like it's okay or like don't hesitate was because after this trade actually played out, I scaled down. Well, I went to the 30-second to see if I would have been able to find an entry, and there was a 30-second entry on that, and I'm like, oh well, maybe next time, like let me scale down to the 30-second whenever like my take profit is really close to where I would enter.
And what ended up actually happening is you did scale down to the 30-second. I think it was the next trade. It was the next trade.
The next trade that I took, yeah.
And you did lose. So one thing, like guys, we're kind of gonna preface. The lower the time frame, the harder it is to predict, because you're going from predicting where the trend is going to go to predicting where the next 2 minutes, 3 minutes is going to go. It's like you have to understand price is going to have some fluctuations. You'll get wicks. If you watch New York, you'll get 20, 30-point wicks. When you play small stop losses, you zoom in super far. Can it work? Yes, but it's like trading on veteran difficulty, because like you got to predict whether the next 30 seconds is going to go to your low or to your stop loss, when it's like the hourly might still go to your target. So like that's what we're going to really look at. But now we're going to look at the losses, go over it right here. So Thursday loss, right? You ended up taking. So this is the trade you wanted. This is the trade you wanted to take. And what you actually ended up taking was an entry right down here, right off of a 30-second close. So right off of this close right here, you ended up shorting, you ended up marrying this bias lower, and that is how you took the loss. And we'll look at the reflection that you specifically wrote. Stop hesitating on your trades. I knew the winning trade, but I didn't take it. I thought the trade would have went break even, but we had the volume. I should have just taken it. Then I took a stupid trade on the 30-second when we finally wanted to retrace. Don't use the 30-second anymore. It's not worth it. That's correct. When you see the trade, just take it. Stop hesitating. If I scale up to the 1 minute and I see the BS I took, it looks really bad. If I would have just stayed on the 5 minute, I would have seen price retrace to the gap and taken a more quality setup, 100%. And it's like now we're going to look at, NQ. So we'll look at NQ and we'll look at this day and what you actually failed to realize as well. So in this given day, I think this was a very clean day. But if we look at, right here, it was Thursday, not Friday, right? Let me just confirm. No. It was Thursday, yeah.
Yeah, it was Thursday.
So it's Thursday, so we'll scale back to Thursday. So it's actually this day right here, right? So if we look at this specific day, right, price is dumping, and what we actually end up doing is we dump, we edge the lows, right? So you can see right here, we have this low, and we edge it, right? For me, when we edge a low, I am very cautious, because a lot of the times we will edge lows and reverse. So when we edge this low right here, I am very, 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 very cautious. And the issue is, like, the whole thing is you married your bias. You married that this low has to hit right now. And it's like, I don't blame you. When you sit on the 1 minute, right, it's easy to now do this, right? You take this closure right here, and then ultimately you took the 30 seconds. If we scale to a 30-second, it's like, right, you saw this 30-second closure down. And don't get me wrong, this is a solid 30-second closure down. But the first thing what you're doing is you're shorting in a 30-second gap, and it's also the only gap of this leg. So it's like you're shorting at the one spot that we should reject if we're going to reject. And on top of that, to me, this trade isn't worth it. You're betting that we can't go up, 25 points, and then we have to go down to your target, which is, again, it's like a 1-to-1, right? And it's like, it's just too risky of a trade, because now when you zoom out, what do you notice? It's like, bro, there's so much room for price to retrace here. There's so much room, and it's like, that is how I see this. And in reality, what ends up happening, price does end up retracing, and we do end up delivering. And this is like, I remember this is the short I took this day, and it's like, the difference is visually, literally just visually, and I think a line chart is going to confirm this idea as well. Look at this, right? When you get your retrace, you get price push up, retrace, confirmation, and we go up, right? We do deliver to lows. We do deliver past the lows, right? It's like a lot easier of a trade to take, and it's a lot less sketchy of a trade. When you take this trade right here, bro, you have a, 60-point stop loss, right? You have a lot more wick protection. You have a lot more leeway for price. And the chances of you now getting like wicked out are a lot less. And it's like literally just visually looking at the candles. Look what you're playing at right here. Like look at what candle you entered off of, right? This 1 minute candle here. And keep in mind, like if we're really going to get analytical with it, is this candle bigger than the two that bought up? It's not, right? If we measure the sizes, we can do this, right? This candle right here, 33-point candle. This candle following it, 22-point candle. The candle you entered is confirmation, 21-point candle. It's not more aggressive than we bought up. So it's like, it doesn't really confirm that we have to go lower. And on top of that, let's say this trade did play out, it's still not worth it. When I see there's a very clean spot for price to retrace to, which in reality, it's like we have the 15-minute gap, we have the 5-minute gap, I will either sit out the trade and miss my entry, or I'll wait for the retrace. So it's like when you wait for the retrace, you wait for price to retrace to now right here, a very conditional gap. It's like, okay, now you just have to see a more convincing move down than the move up. And it's like, you can just chill here on the 5-minute. You see what? A 5-minute candle that is what? Way more aggressive than these candles up. Same thing with the 1 minute. It's like, okay, on the 1 minute, you have, these two candles up, which are what? 40 points. And then we have the candles down, which are how much? 55 points, more aggressive. And it's like, this is what you can take your short. This is what I took this day. I think it was a very clean example. And this is a trade that you can take. This is the whole point. This is a trade you can easily take. You know how to take. The issue is you just FOMO'd in. You FOMO'd in. Ultimately, you FOMO'd in because what did you say? You saw price dumping. You missed your entry up here. And you were frustrated that you missed your entry. And when you saw us dump, you saw the clean low, which you are right. There is a nice clean low sitting right here. But I think this day, you couldn't swallow the fact that maybe that low is going to hit without you getting an entry because you already missed your entry up here. So that's honestly what your reflection should look like. First of all, you have to zoom out. You have to look at all the time frames. And you have to understand, right? Price is going to deliver on the 15-minute, on the hourly, right? After we get this hourly candle closure, there's no way we're not getting these lows. Look how big this hourly candle closure is. 256-point candle. The odds of us, rejecting thin air before we hit this low, very low. And the odds of us, rejecting before we hit this other low, pretty low. But what do you understand? This is an hourly candle closure, which means what? How long can the trade take to play out to these lows? An hour, 2 hours? It could take. And it's like, when you scale down on the 1 minute, you're saying this trade has to play out within like 3 minutes. Where was the hourly candle closure? It was at 10 a.m. So we got the hourly candle closure at 10 a.m. and you were taking the trade, I think 8 minutes after. So you're saying this has to run instantly. And it's like, in reality, when you see price make this aggressive of a move, this is a huge candle. This hourly bearish candle is bigger than every single candle in the last, 5 days. There is not a single, there is not a single candle that is as big as this candle right here. The other one that's closest is probably this, candle, 5 days ago. So it's like, you understand this is a very bearish candle, but in reality, it's like, okay, when we get that bearish of a candle, there's a chance we're going to get a little bit of a retrace. Price has to retrace. We have to mitigate some orders before we deliver to the target. When I see a candle like this, I think these targets are 95% chance they're going to hit. 90 to 95% chance they're going to hit. The issue is, and the only way you can lose is you get caught up on the low time frame. You get caught up on the 1 minute and you ignore these higher time frame. You ignore what the candles are trying to tell you. You ignore the fact that, hey, there is this gap that we want to retrace. Price does want to mitigate higher. We do have orders to fill there, and it's a very, very clean displacing gap. Versus for you, it's like, what do you play off of? It's like, what is price reacting off of? This tiny 1 minute gap, knowing that there's a 5 minute gap above that's about to be formed. Again, you're just trying to race into the entry. The biggest lesson is like, bro, price is not going anywhere. The setups will come. I remember this specific day. There was this pretty clean trade, right, that you talked about right here. You saw this 1 minute right here. Boom, this close right here. I remember personally, I didn't take this right here. I didn't end up taking this right here. And when I see price running, it's like, obviously you're like, damn, you're like, okay, I definitely could have entered right here. Like, damn, but I didn't take it. You didn't take it. What can you do at that point? You can do two things. You can either say, I should have won that trade. I should have taken that trade. I shouldn't have hesitated. Now I have to get my lick back. I have to take my win. What I personally do is like, damn, okay, I didn't get an entry here. I'm either going to wait for an entry even better than this entry right here, or I'm just going to go on to the next day and I'm just going to, stomach it, right? And it's like, then after you stomach it, now you can go and journal. Now you can journal what you journaled, where it's like, I shouldn't have hesitated. Yeah. But what you don't do is now you FOMO into a trade that you shouldn't have taken. When in reality, we got a setup, which in my opinion was about, not like, I'm not going to rate it, but I would say it's better than this setup right here. We get a retrace, we get a confirmation, like a lot cleaner than the setup up here. But the point is, in reality, it's like, okay, you can't, get in your head and think that maybe you deserve that win, that you had to get that win, that, now you have to take that trade for the day. And whenever you get that, you're going to get confirmation bias. You're going to ignore the lower time frames. You're going to ignore what the market is trying to tell you. So that's what, you have to make in your journal entry. It's like, okay, again, you did right. I should have scaled it to the 5 minute, but you should have scaled it up even more. You should have been sitting on the 5 minute. The worst thing you can do is called 1 minute camping. Sitting on the 1 minute, sitting on the most volatile, unblocked in time frame. The time frame where you're going to get wicks, where you're going to get fake outs, where you're going to get all of this stuff. You want to sit on time frames where you're not going to get faked out. The 5 minute, that 15 minute. You're not really going to get faked out as much on these time frames, right? Especially during New York. Maybe during Asia, you'll get faked out on the 5 minute. But during New York, you're not going to get faked out on the 5 minute. You're not really going to get faked out on the 15 minute when good conditions, right? So that's a very important thing. And basically, this trade right here kind of warned you, right? This trade right here that you took on Thursday, this loss, warned you for the loss that you took on Friday. And Friday, basically, you did the same thing. It was basically the same thing. You had this first entry that you hesitated on again. So you hesitated, right, the first day. And what you ended up taking is this trade right here. And it's kind of the same idea. You ended up taking the 1 minute entry right here. You ended up chasing price. If we compare the 2 days, we'll compare them side by side right now. But you'll see it looks very, very similar. Now, the second day was different. Friday was a bit different. And we'll look at why it was different now. But it's the same idea, right? You do end up kind of chasing price and you get retraced on. And it does end up going to your target. Now, the reason why this day was different, you wanted to, off the rip, get a short to some lows on NQ, right? Which were these lows right here. Now, the first point of flawed logic, and me and Will already talked about this before, is if you do look at ES, okay, ES was more bearish. This is the low you targeted on NQ. It has already swept on ES. And it's like, if you're targeting, the only thing you can target, knowing that ES is a more bearish pair, is this low right here. After this low gets swept, you can't really short. And the issue is, this low got swept. So what? You didn't catch an entry to these lows right here. You didn't catch this entry to the lows, right? The entry was similar on NQ and ES. It's like, okay, here's the NQ trade. Here's the ES trade. They both delivered to the low. But since ES actually swept out this final low, right? ES swept out this final low. It's like we swept out a 4-hour point of liquidity. What you ended up doing now is instead of realizing that we swept out that point, you were looking at NQ and, you wanted this next low. But because you were looking at NQ, you failed to realize that, hey, NQ is a bit more bullish. If we're going to flip, we're going to flip right now. And that's the truth. Like, if we're going to flip, this is where we would flip. And what price ended up doing? It ended up what? Slowing down, right? Kind of being indecisive if we're going to continue lower or not. And it ended up faking you out. Right? Like, look, this type of entry, retrace to a gap, strong close. This is fine when there's a draw. But after we swept the draw, and it's like, when we sweep a draw, when we sweep a level of liquidity, you have to wait. You wait. You never try to predict if we're going to continue running more. What I always say, wait for price to confirm whether we're going to pick a new target, right? So it's like what we ended up doing. We kind of ended up retracing, blah, blah, blah. And on top of that, you also played very big stops on this, which wouldn't make sense. If you're taking a 1 minute trade, if you're taking this 1 minute close, you're saying that, hey, we should run with the same volatility we have before. Push down, retrace, push down, retrace. We should continue, right? Lower. But when you're playing big stops, it's like there's no reason to be playing this big of stops. If you wanted to play this big of stops, then what does it mean? You're scared of price doing what? Retracing to this gap. If you're scared of it retracing to the gap, then don't take the trade. Then sit and wait for it to retrace. And if it doesn't retrace, it's fine, right? It's fine, right? But it's like if you're already scared, your mindset is already telling you. Your subconscious, your intuition is telling you there's a gap above. It might retrace to that gap. And you basically ignored your intuition. Instead of just waiting for it to retrace to the gap like the day before, same thing. Instead of waiting for it to retrace, you were like, well, maybe I should just play bigger stops now in case it retraces. Well, it's like, now you're trying to predict instead of like just waiting for it to either just, blow past and it's like, okay, it's fine. If it did continue dumping, I think it's fine to just stay out. Versus now that it did retrace, it's like, bro, you ended up getting wicked out. But it's like, I'm glad you got wicked out because it's like, that is not the valid thing. In reality, it's like, okay, we still did sweep the target. And after price, now confirms, I would say maybe after this candle closure, now we do end up delivering lower. But the issue is like, you can't really predict whether we're going to take out this next low or if we were only going to take out this low because, ES took out the prominent lows and then we flip. Because what we see happens now, we do flip. Just like we did flip a bit past this next low, we could have very easily flipped right after we swept this low. And what that would have looked like for your trade is, us sweeping this low right here and then instantly from this low, boom, rejecting higher. And you would have got your stop absolutely ran past. The issue is that it did deliver. Maybe you were like, bro, like I was right. In reality, that's a trade you should not have taken. I think that's an unprofitable trade. What will look like here, there's a pretty obvious trade that I would have taken 10 times out of 10. As soon as market opened, the first candle was a huge candle down and we had a small retrace confirmation lower. This is what I should have taken before in the past. The trade I did take afterwards was more of a FOMO trade and I was not paying attention to higher time frames. This is a better, reflection, but you didn't really hammer down on what you did. You did kind of loosely say it's like there was a pretty obvious trade I would have taken 10 times out of 10. Well, it's like, if there was an obvious trade you would have taken 10 times out of 10, why didn't you take it, right? It's like, why didn't you take it, right? I remember specifically that day too, I didn't take this trade either, but I got on my ass for that trade. I wrote like a 2-paragraph reflection. In my head, I didn't take the trade because I was like, okay, I'm 2 for 2 on the week. I don't want to risk any more R, right? Because I'm already up. And that was flawed logic. So I wrote that in my journal. I'll pull that up in a second. But that's what I wrote. I had my reflection. I was pissed at myself. I'm not gonna lie. I was pissed at myself. And it's like, that's what I reflected on. Versus you, what you wrote, it's like, okay, I would have taken this trade. Well, it's like, if you would have taken that trade, you would have taken it. You obviously didn't, and there's some reason you didn't take it. That's what you have to reflect on. You have to write down, okay, we're all human. You're not always gonna be right. You're not always gonna take the trade. Mm-hmm. But when you don't take the trade, there is something in your head when you were about to pull the trigger that stopped you from pulling the trigger. And that is what you have to write down. So for that trade, when you say it is something you take 10 times out of 10, why did you hesitate if that's something you said you would have taken 10 times out of 10? Why do you think, that's what you have to write down? Why do you think you would have hesitated? Why do you think you did hesitate on that trade?
Honestly, it was probably because it was over 100 points away, and I was like, man, maybe I need to wait for more confirmation and then another retrace to actually take it, because I'm just not used to taking trades that are over 100 points, because it was pretty far away.
Yeah, but another thing you notice, and I'll kind of point out, is yes, it was 100 points away, but even though it was 100 points away, how big was, this opening candle? Probably a pretty big candle. Yeah, 65-point candle. Points. So it's like we have insane volume. If there was already one 65-point candle, I mean, what are the odds we'll get another 65-point candle? I mean, very high chance, right? When we have high volume, we continue with high volume. But what I would write then is don't write there's a trade I would have taken 10 times out of 10, because it's not a trade you would have taken 10 times out of 10. You actually hesitated on the trade, and you actually hesitated the day before.
Yeah.
You hesitated the day before. So it's obviously not something you would take. That's like you in turn lying to yourself. Now, whether it's subconscious, whether you realize it or maybe you didn't realize it, you're still lying to yourself. And it's like, that's the issue. It's a slight thing like this. It's a slight thing like this, but that's actually what's detrimental. That slight lie to yourself, you know, maybe you didn't realize it. And I'm sure you didn't realize it because you are on your game. But the thing is, that slight reflection where you did write, hey, I would have taken it 10 times out of 10 instead of, hey, I wasn't fully confident in taking this trade. I was confident that the low was going to hit, but I sketched myself out because it was 100 points away. But now looking back, it wasn't logical why there was a 66-point candle off open. That would have been my indication that we are going to continue lower, that we are going to deliver with the volume, and I shouldn't have hesitated on that trade. I should take it next time because of this. And obviously now that you took the second trade after, it's like, okay, now you do have to get on that and, you know, go more in depth on exactly what I talked about, where it's like, okay, I ignored ES, I ignored the fact we swept out the lows, and I still stayed on the 1 minute, and I FOMO'd in again, right? So it's like, that's what you actually have to write down. That's what you have to write down in your journal entry, and that's the main thing we're going to have to change with some of these journal entries. First thing is obviously keeping all the higher time frames, because we know, right now we know you're good at spotting where price wants to go. I think most of these days, you're like 80% of the time accurate where price wants to go. So it's like, if you already know where price wants to go, that's the hardest part. The hardest part is predicting, is it going to go here or here? You already know where it's going to go. Now you're getting caught up in the entry, so we know what. First of all, like, I would just like, first of all, like, all your trades are on the 1 minute, and you realize, like, bro, there's no need to even be on the 1 minute this much. It's a hard time frame. It's a hard time frame to trade. So it's like, first of all, going into maybe the next couple of weeks, it's like, bro, be open to taking, not even going down to the 1 minute. Like, it's an addiction for some people. It's like an addiction, and it's like you have to relapse, but it's like, bro, you can survive without the 1 minute. You can go on the 5 minute. You can trade off the 5 minute without going to the 1 minute. You can take a trade off the 15 minute without going on the 1 minute. It's not going to kill you. It's not going to kill you. I promise it's not going to kill you. If anything, it's going to make your life easier, right? So it's like, that's the first thing to realize. On top of that, the second thing to realize is, whoa, we need to improve some of these journal entries. We really need to improve some of these journal entries because, again, you're not being fully honest with yourself. And maybe you realize it, maybe you don't realize it, but you see now when I pointed out, you are not being honest with yourself because you say it's something you would have taken when in reality you didn't take it. So it's like, that's where you have to write, okay, I didn't take it. This is why I didn't take it. This is why this was the wrong move. That's what I always put for the reflection. So it's like, whatever you go into the day, you either do something or you don't. If you do something, you did it for a reason. You know, I didn't take the trade for you. Joe Schmo didn't take the trade for you. Will took the trade. Why did Will take the trade? You have to write exactly why you took the trade. So that's a reflection we have to write now. Why did I take the trade I did? Exactly why I took what I did, or exactly why I didn't take what I didn't take. So if you didn't take that first trade, you write exactly why you didn't take it, right, in your time, at your thought process. The second reflection you write is after the day is over, after the trade is played out. Now, some people get emotional after they lose or whatever. So if you want to make that second reflection, maybe at night or at the end of the day, that's fine. But the second reflection is unbiased. What is the market telling me? When I look at the market now, unbiased, whether I won or I lost, I saw exactly what happened and I can't argue with what happened. Which means that now, when I log into the market and I look at the 1 hour, the 4 hour, I look at all these time frames, it doesn't matter what trade I took. I'm just looking at what these candles are telling me. That's where your second reflection is. From what these candles are telling me, what happened and why did it happen? If we did go to the next low, why did we go to the next low, right? And what confirmation told me we were going to go to the next low? For this day specifically, I was like, okay, we did reject the lows. And then after price does what? We do close lower. That's when we actually end up delivering to the lows. That's actually what I would write for my reflection. It's like, okay, when we did go lower, what was the key indication? It was this. And after that, it's like, okay, now we flip. So it's like, that's what honestly most of your reflection has to be. That's what most of your journals have to be, is like, okay, what happened and why did it happen? That's what you have to learn from. It's like, it's fully unbiased now. It is fully unbiased because it's like, okay, what did I do? Why did I do it? Why am I going to do it next time, or why am I not going to do it? And that's the biggest thing, and that's the biggest learning lesson from these, little B stings, these little losses that you took. It does suck, but now that I point them out, it's like, bro, some of this stuff, like, do you think it's obvious? Do you think it's like, damn, like,
No,
what?
it's really obvious, especially whenever you point it out for me. Like, I think I needed to make all of these mistakes and actually write them down so I can learn from them. Cause I'll bet you like $1,000 that I've made these mistakes before in the past before I started journaling, and because I didn't journal them, obviously what happened, I made the mistakes again.
Yeah.
And not only did I journal them, but you are also like you're pointing it out for me and like literally showing me on the chart, and it is helping me.
Yeah.
And I can see it better now.
Yeah. So it's like, now all you have to do is take, okay, this is what I did, this is what happened, this is my lesson, but I'm either going to learn from the lesson, or I'm going to have to take the same lesson again. It's the same thing when your dad yells at you for doing something once. It's like, okay, you either listen to him. I personally know, like, for me, it was like, honestly, I'm not going to lie, I was like taking my dog out before school. Like I used to have to take my dog out before school, and it was like 6:30 in the morning. It's like, bro, the last thing I want to do is take out my dog. And I remember, like, some days I'd take him out, and then some days, like, I wouldn't take out my dog, and my dad would like yell at, be like, yo, did you take out your dog? And I was like, yeah. And eventually, like, I was like lying though. So like some days I'd lie, and then he looked on the camera and he saw I lied, and oh my god, I got in so much trouble. He like caught me in 4K, and I was like, oh, I'm so sorry. And then I actually didn't learn my lesson that time. That time he like grounded me for a couple of days. Like I got in trouble, and then I did the same thing again. I lied. Oh my god, I got grounded for like a month, bro. I'm not gonna lie. I got grounded for like I that time I actually learned my lesson, bro. That time I actually learned my lesson. So it's the same thing in trading, man. It's really the same exact thing in trading. It's like, bro, this lesson right here, this might be you teaching the lesson. These $1,000 that you lost, that you blew on accounts, that's fine. This might be your lesson to never make these same mistakes again. But now it's up to you. Now it's up to you. Are you going to actually learn from these 3 mistakes? Are you going to learn? And ultimately, the main thing you have to learn is, I have to look at the higher time frame. I really have to. 90% of your day, this is what I always tell people, 90% of your day should be spent on the hourly, the 4-hour, the 5-minute, and the 15-minute. Maybe 2-3% of your day should be spent on the 1 minute. I personally only scale onto the 1 minute when I'm ready to take my trade, or like a minute or 2 before I'm ready to take my trade. And if I don't take my trade, I go right back up to the higher time frames. Because it is so easy to see a 1 minute closure you like and FOMO into a trade. It is so easy, because it happens every 1 minute. Like, how many 1 minute candles are there in a day? I think there's 60 times 24, I think 1,400 1 minute candles in a day. That's 1,400. Okay, I guess we're looking at New York session. Probably 120 1 minute candles. So 120 chances for you to see something you like and FOMO into it. Versus you look at the 5 minute now, it's like, bro, now you're going to have 25 chances. 25 chances. You look at the 15 minute, you have bro, eight closures. You can't FOMO into a trade. You have to wait for each new, you can't FOMO it, right? So it's like, that's the whole thing. It's like, bro, if we move, you don't have to really zoom in that much. We're going to make a move. If you zoom out, we'll probably still make the move. The issue is people zoom in too much, and then they'll get gassed. But again, this can either be your lesson, it can be a little sting, or if you're ignorant to your mistakes and we come back again and you make the same exact mistakes again, you FOMO into trades, you ignore the higher time frame, then you might have to lose even more money to figure out your mistake. Maybe you'll get grounded like me, except instead of getting grounded, now it's like you blew 5 more accounts and 5 more. That's what people get stuck in, because they don't look at their mistakes. But that's what I know you're not going to do. You are going to reflect, because that's what you've been doing in the past, right? When we first started, you made some mistakes, right? You hesitated and you closed your trade early, and the next time it happened, you didn't hesitate and you didn't close it early, right? So you did fix that mistake. That was one mistake you fixed, and it's like, okay, I'm not going to close, I'm not going to trail, I'm not going to do this. But now it's like, okay, we're actually making some technical mistakes, and it's like, okay, we have to recognize why these are technical mistakes, and now just moving forward, that's all we have to do. We have to fix these mistakes. That's all we have to do. We're human. We make mistakes. You either take a mistake as a lesson, you learn from your lesson, or you make the same mistake again and you don't learn from your lesson, right? That's the way this stuff is. But yeah, now that we've reflected back on all the data, we've reflected back on all the trades, and you see the simple mistakes that you could have fixed, all we're going to be doing, going into this next week is, again, buying a new set of accounts, buying a new 5 evals, and again, you're going to risk the same way you did before, and we're going to try to pass those accounts in 2 trades. Again, however long it takes to take 2 trades. Again, same as always, no rush, no nothing. Another thing too, the only reason we're hopping right back into accounts is your mental is good, right? Some people, when they blow out accounts, right, maybe it's a lot of money to them, maybe they're not prepared to lose the money. It's very hard to just rush back into accounts because you're going to be very emotional. So in that case, it's good to take a week off, right? For you, like, again, you understand all the mistakes you made. On top of that, you work pretty often, and it's like you don't need the money. So it's like you're not really even attached to that amount. It's not like necessary to you right now. And again, that's all we have to mimic, and time's going to do the rest. Again, I'm confident. I'm like always personally confident. Anyone can succeed in trading. Some people it just takes longer. Some people it takes shorter. For you, it's like, okay, bro, you made a couple mistakes. It took like a month pretty much, or like a bit under a month to get those mistakes in, but you had to take those mistakes. You had to make those mistakes. If you didn't make them right now, if the trade opportunities we had right here, it was different type of trades, and you didn't make those mistakes, and maybe you did, win the next 2 trades, 3 trades you got to pay out. Maybe right after that, maybe you sized up, blah, blah, and you had a decent amount more, and now you made these mistakes. Maybe now you lost even more. Maybe you lost more of your buffer. Maybe now it was a worse, more painful mistake. This is how it happens. The point is, the mistakes are going to come. And especially when it's such crucial thing, it's not like little mistakes here. It's honestly like a pretty, I wouldn't say big one, but it's a very important one, because the most important thing about trading is looking at all the higher time frames, not getting confirmation bias, not zooming in too much, right? So like knowing that it's a simple fix, basically. It's like literally just clicking 2 buttons and scaling up some time frames. It's a very simple fix, and like that's what I want you to think about moving forward. It's like, you shouldn't really be scared. You shouldn't be stressed, because it's like, exactly why. I know like that's how you're feeling right now.
I'm not stressed, or I'm not even too worried. I'm actually looking forward to starting a new set of accounts because, I already said it. I know the mistakes I made were super avoidable, and if I do see them again on the chart, I'm not gonna make the same mistake twice. Like, why would I shoot myself in the foot again? I made my mistakes, and I am happy that I made those mistakes on those 550K evals. Like. It really was. It's not the end of the world. I'm gonna be fine. Like Cole said, it wasn't a gunshot wound, and I'm gonna bleed out.
Yeah,
I'm fine. So
that's a reflection, man, and that's that's what we're gonna change. We're gonna keep on doing this, however long it takes. Again, I'm very confident in Will. I know he's going to reach the goal. Again, the time it takes to reach a goal, it doesn't matter. And that's another thing I'm gonna touch on. There's so many people that expect a result by a certain time. Ultimately, all you can do is put in the effort every single day, put in the correct effort every single day, and that result is going to come as fast as the energy you put out in the world comes back to you. It's going to come as fast as you can. And it's like knowing that, even though you have been mainly on point during this challenge, there are still some points where it's like, here you made mistakes like this, you ignore this. So you weren't even fully 100%. You're not even executing to the best of your potential. And the reason why you weren't is like, okay, you weren't really realizing these things, or maybe you realized them and you didn't realize them fully to actually think about it. Maybe like when you took that first loss and you realized like, okay, I ignored the higher time frame, but then you were like, okay, you maybe still ignored it. And then when you blew the accounts, you got locked out. It's like, okay, maybe that's when you sit and you're like, okay, that's my lesson now. Yeah. That's my lesson now, and that's when you reflect. So again, you just have to give yourself some time. You have to give yourself some patience. Market's not going anywhere. Time's only going to pass faster and faster. You might as well get into a good loop. Where you are improving, because the market's going to go. Market's going to pass. There's going to be plenty more opportunities. Again, not the end of the world. Whenever you think it's the end of the world, it will be the end of the world, because you'll start rushing stuff. You'll start, focusing on the result. You'll start doing this. You'll start doing that. When in reality, setbacks are normal. They happen. It happens in anything, whether it's trading or anything in life, bro. Any business, anything. There's major, major setbacks always. It just depends whether you let that setback take you out or you take it as a lesson, you learn your lesson, and you get up on your feet and you prosper, bro. Like, it sounds corny, but that's all it is, man. You get back on your feet, man. Life is gonna throw stuff at you. It's gonna be hard, bro. Life is not easy. Everyone realize this. It's just up to you whether make the mistake, you sit there, you cry, you blame everything, or you're like, okay, this is my lesson. This is what the world is trying to teach me, and I'm going to learn from it. I'm going to improve, and I'm not going to make the same mistake again. That's all we can do as humans, is just learn. Learn over time, get better over time, improve. And again, whatever result, whatever goal you have, it will happen eventually. as long as you stick to this process. Again, same thing again, focus on the process. That's all we're doing. And I will catch you guys in the next episode. Peace.